The AI boom sparking a $2 billion bet on DataBank. The data center developer will use the funds to build out 3 large U.S. facilities with the backing of Australia's largest pension fund, as well as DigitalBridge, which is the control investor of DataBank. So here now to talk about this more are the 2 people who are directly involved, longtime partners, Raul Martynek, he is DataBank's CEO, and Marc Ganzi, who is CEO of DigitalBridge. Welcome, gentlemen.
Thank you, Scarlet.
Raul, let me just start with you. You're raising all this money, and you'll be, of course, increasing and building out your footprint. Talk a little bit about the scale that you'll achieve with this latest fundraising.
Sure. So DataBank, we're one of the largest developers in the U.S. of data centers. We have over 70 assets in 26 U.S. markets and over 2,500 customers, about 350 megawatts of installed data center capacity. This new facilities will allow us to build out over 1 gigawatt of data centers across the U.S.
And we've been talking about Netflix all hour because they reported earnings. Netflix is, of course, one of your customers. Their servers sit in your data centers. Are people just knocking down your doors to get more access?
Yeah, it's been, look, the data center sector has been a great sector for a long time. If you think about it, everything that's digital originates and terminates in a data center. So the demand's been there for, well over a decade. Obviously, in the last 24 months with the advent of generative AI, demand has really taken off. So all kinds of companies are looking to harness that technology, and that technology needs data centers, needs NVIDIA chips as the foundation for it.
So, Mark, I assume raising money for a venture like this in this environment is probably way easier than maybe what it was, 10 or 20 years ago. Talk about that.
Well, look, I think LP interest in the sector is at an all-time high. Investors are looking for the next great opportunity in AI. We tell investors very simply, the place to start is the picks and the shovels. And what Raul's doing and what DataBank is doing is supplying that mission-critical infrastructure. And so infrastructure investors, pension systems, sovereign wealth funds, they want exposure to the early innings of AI. Best way to play it, be in the infrastructure. Long-term leases, great customers, like you said, like Netflix, Amazon, Microsoft. And most importantly, they really like to back winners. They like to back great management teams. Raul and I have been partners for over 2 decades. We've built multiple companies together. And when you have a great management team and a great secular trend, capital seems to materialize pretty quickly. And in this instance, we were really fortunate to have had the support and partnership of Australia Super.
And Australia Super, and it's funny, I was actually talking with one of the lead managers over there just last week at the Greenwich Forum. And there is a lot of concern right now about the power use that AI requires and how data centers are being built to sort of either be more power efficient or to harness their own power. We've seen deals with Microsoft effectively saying, like, we're going to restart a 3 Mile Island nuclear reactor, something I didn't think I would ever hear in my lifetime, but here we are. So as you sort of take this money and build these things out, how much does energy efficiency have to be a big component in that process?
Well, look, as the sponsor, what we're trying to do is create the best solutions that require the least amount of interference from the grid.
Okay.
I don't think our country really has a power problem per se. We're generating a lot of power. The question is, how do we get the power there? How do we get there that's an efficient way? And then most importantly, how do we solve the problem for our customers, helping achieve their carbon neutral goals? I think one of the things we love about the DataBank investment is Raul started down that journey 7 years ago in terms of moving towards renewable power. And that's a process the company's on, and probably Raul could tell that story better than I could. But
yeah, we're already at over 60% of the kind of the energy that we use comes from renewable sources or via offset with RECs. If you think about the data center sector and the main players, Amazon, Google, the hyperscalers, they're the largest consumers of renewable energy in the world. So you could argue that the data center sector really kind of creates the demand for all this renewable generation. And these latest kind of moves around the nuclear side is just another example of this industry really driving renewable energy solutions into the marketplace.
To what extent was that a conscious decision to seek out alternative sources of fuel, or was this more because it was available and it made more pragmatic sense?
Well, there was 2 reasons. I mean, renewable is, from a price perspective, it's gotten parity with kind of fossil fuels. And, our largest customers, it's an important thing for them, right? Having a roadmap to carbon neutral by 2030 or 2035 is a key corporate initiative of these companies, right? So we want to be aligned with our customers, and we think it's also good business.
I'm going to ask you kind of a weird question, Mark, because when we talk about DigitalBridge and kind of when it started, I mean, it's been around for a while now. You're now riding a wave that I don't think you could have predicted where we are now, or maybe you did. Maybe I don't want to shortchange you here. But when you talk about how quickly technology changes and moves to whatever that next new thing is, and right now it is AI here, how do you make sure that your investments that you're making now are going to be relevant, say, 25 years from now?
Well, look, at the core, we're one part real estate investor, we're one part infrastructure investor. And that really makes us an investor in the real assets category. I think what underpins all of our investments, whether it's one of Raul's data centers, whether it's a long-haul fiber out with Zayo, whether it's a tower vertical bridge with the Verizon deal that we were here a couple weeks ago on, here's the key to our business: long-term customer relationships. We've been doing this 30 years. And so when we have a commitment from a Netflix or an Amazon, and that's a 10-year or 15-year commitment, the best way to stay agnostic in technology as an investor today is have long-term durated cash flows on the other side of your counterparty credit risk. And so what we love about what Raul's doing, we love about all of our businesses, all 46 of our companies around the world today, is we have great long-term relationships with customers. And the great thing is investors, when they invest with us, Romaine, they don't have to make a bet on technology. We're providing that neutral, mission-critical infrastructure, which is why people like digital infrastructure today, and why you see the interest level so high. So at the end of the day, yes, technology is important. We have to understand it. It's in our facilities. We have to get close to our customers and make sure that we're evolving with them and building new infrastructure like Raul's doing. And so that's the key for us, is having great, solid, long-term customer relationships.